All right, hey, good afternoon, everyone. It's Friday, about 2 o'clock. Markets are closed, pretty volatile into the week. So let's take a look and see what happens. Big news of the week. Yesterday, there were lots of talk about, or was lots of talk about cancellations and soybean basis crashing in South America because of the big crop. So the assumption is big crop, lots of supply, demand is strong but not increasing. So more supply, less demand, lower prices, lower we go. That was the story that came about yesterday. What I've got in front of you is the weekly chart of November 24 soybeans. This is not a continuation chart. This is just the weekly chart of Nov 24 because I want to put it in context. You can see where we are. Here's the big down move that we've had from July. Here we are trading at the lowest close for the entire move on a weekly basis. We are sitting right at a 1.618 retracement of this counter trend move right here. Okay, that's how this counts. You snap it to this level, it measures this distance, and then it plots it down. So here's a 1382. Here's a 1618. That is also failing at the 61.8% retracement of this big rally up. So that's this Fibonacci cluster that we've been talking about for a couple of weeks, or at least for several days here. And what we did today is closed right on the very bottom side of it. And I think what that probably does is more likely than not open up a move, maybe as low as down here to test these lows back here at the 1133, potentially lower. And if prices want to get exuberant, then they could easily come down to the 125 extension of the entire move, or maybe even lower. I don't want to get ahead of ourselves first because there's this gap right here. I want to call your attention to this gap and this low, and then this set of this open and this this close and this open right here. So you've got this zone of support. Let me put that on a triangle, rectangle here for you. So you have this area, which is from this gap, which is right here, to this low, all the way down to these lows right here. That area needs to hold on the weekly chart, and you can just see it, right? If this area doesn't hold, then there's one more shot down here at 1130. Below that, we just come lower. And there's a lot of chart support back in this area, but we're more than $1 away from here, so you don't want to rely on it too early. But this is the area where we're looking for soybeans to fall to, reverse from, and work their way higher. If you do the math here, this is also almost the 78.6% retracement level of this entire move here. I don't have that charted here, but if you do the math, this is real close to it. Here's the 61.8. Here's the 50%. So this distance is 11. If we want to go to the 78.6, you got to add 17 to it, so it's right to the bottom of this range. Okay, so there's a lot of stuff that's going to happen right down in here if we get down to it. With today's close, you have to assume that that's going to happen. Let me take this out to the daily chart so you can see it. Week close, big reversal yesterday, outside day, double close, key reversal. Today we had nice follow through, lowest close, unable to hold last week's low at 1185. So lower we go down into this region, potentially a little bit lower if it wants to overshoot it. But we want to see this area in here hold. Otherwise, there's something worse going on in beans. And that's certainly possible. Remember, gaps have a tendency to be filled, right? And if there's a gap all the way back here, here's that gap. If there's this gap all the way back here, don't forget there's one up here too. So gaps have a tendency to be filled, and just because we go lower, that doesn't mean we don't get more volatility, because there's still lots of stuff that can happen. But today, I think you have to look lower. I think that's the only rational interpretation with that close. Old crop wasn't quite as bad of a close because it did hold last week's low here on at 1201, held the $12 level, held the 61.8% retracement. Let me take that out to a weekly chart of the March contract so you can see it. We're already down here in this gap area from the summer. So March has already done the work, which is why I think it's holding up just a little bit better. If this level fails and we come all the way down into past this 1187 level, then we're somewhere down in the 1080 range. I think we're gonna come test 11 pretty quickly because there's just no area of support for that to withstand. So we're coming up on short time on the March contract, so it may not have time to get there, but that makes us a little bit weaker July too. So we want to see strength coming out of the gate next week, and we'll just have to see what the news headlines look like from there. But lots of technical action on beans. The last 2 days were not insignificant, and that is not lost on us at all. Okay, now let's look at corn. Here is new crop corn, daily chart, new crop corn. We had a little bit of strength the last couple days. Today that has been completely undone. This is a 3 inside down where you have a big up day followed by a little piercing pattern yesterday, followed by a day today that takes out the full body of this candle here. We closed below it by just a few ticks, so that is a 3 inside down. On the daily chart, challenging this low is looks to be somewhat imminent, and then below that down here. Where does this market fall to? Let's just run some numbers. Let's go off of this peak right here and get some ideas as to where we may go. We're at the 1618 level. Next stop would be the 463, potentially down to the 450 area. And if we get even more exuberant to the downside, low 4s. I don't think we go straight there. I think we've got a lot more work to do before we get there. But the long story is this. There's no reason to be quick to cover our hedges here. We're hedged from higher levels. We need to hold it that way and let the market do its thing. We're going to get some signals, some opportunities to buy calls, and we'll take those when they come. But we're just going to sit and be patient with this market, understanding that that straight lines don't happen, but there's no reason to jump in. It was really tempting on Wednesday to jump in and buy calls, thinking, oh my gosh, we're going to come test this. But there wasn't a signal here either. So just sit back, relax, and let the market do its work for you. The nearby contracts really pretty much look the same. There's not any reason to be on the long side as a hedger here, and also on old crop. The March contract, no reason to be on the long side there as a hedger. If you're a speculator and you want to take a shot above these lows, that's a pretty tight risk reward. I think it's got a really low possibility of working, but it is just a 4 or 5 cent risk here, so that's not unreasonable. Although there's not a strong reason, especially with the 3 inside down here, you may as well wait and see what happens. So no reason to be overly bullish corn in the nearby. It does not mean that's the long-term view, but certainly in the nearby, lower is the word of the day. Okay, wheat. Surely there's some good news here, right? Maybe. We do have an outside day. We have a hook reversal with an outside day, but we did not get a bearish engulfing day or a double close. That's significant. We held the hedge line and we held this downtrend line. That's really the only thing positive that you can say about wheat. Is that it didn't die as much as the rest of the markets did. But nevertheless, it didn't have a great day because that is a reversal. So what do we do with wheat? Old crop, it's okay to stay hedged up here, but if we're long the 650 calls and we fall back below this hedge line, we need to just get rid of them. No sense in letting that time premium get out. We'll look to re-own last year's crop maybe out in July. But let's look at July so we can talk about new crop. This is where it gets tricky because when do you stop owning last year and start selling this year? Well, here's new crop. Here's this downtrend line that we've been looking at. Here's the box that we drew, right? Short 650 call, long 650 put, pricing anywhere inside this window. We're knocked out at 650. We're protected at $6. We're still just dead center in here. We did hold the hedge line barely. We've held this region of support and we bounced off this hedge line. That's a good sign. We got to get up and out of here and take this high out on Monday, in my opinion, or we certainly can't just hang out here and grind lower. We need to get up and gone if that's going to be a good trade. So for today, we haven't taken any action. We didn't lift this We didn't exit any old crop calls, and we didn't exit these short calls. If we are up and out of here on Monday, we're going to exit this position, and we're going to hold the calls. If we come back below today's low, we're going to just hold this position, and we're going to exit these calls back here. I hope that makes sense to you. So let me repeat that. If we take out today's low and come below this hedge line, we're going to exit long calls that we have here. If we trade above today's high and yesterday's high, we are going to cover the short calls we have in July. So we want to open the upside up to new crop. We want to keep the upside open on old crop if we're going to come up and out of here. If we don't, and we follow wheat and corn or beans and corn lower, if they continue, then we want to exit old crop and hold this one, because lower we go, and we'll probably even look to add to sales down here. Nobody wants to add to sales down here. I completely understand that, but look at what wheat is telling us. If this rally fails and we come lower and take out the bottom edge here, your next stop is 579, below that 563, below that. Remember, this is where beans and corn are already trading. This is where they're heading. So you're talking another $1 worth of risk in wheat, and so that's worth hedging. So I know nobody wants to sell the bottom of the market, but this could actually be a decent a place to get short here if those other two markets break. So what's the catalyst that will do that? I don't know. We thought that wheat looked really, really good yesterday. It really withstood a lot, but for no real good fundamental reason whatsoever, sellers just emerged, and it was a selling day. Maybe they come back in on Monday and buy the hell out of it. We just don't know. It's why we got to take it a day at a time and think about what we want that risk profile to look like every single day. So stick with this. It's a process, not an event on all three of these crops. We just need to be patient and take them as they come. But for now, we're going to hold exactly where we're at, and we're going to wait and see what next week looks like. Hope you guys have a terrific weekend. Remember, there is significant risk trading futures and options, and you should only do so in light of your own financial condition. If you need help analyzing anything, please call us. We will be more than happy to review a position and help you get positioned to where you want to be. Call us if you have questions with your position tracking spreadsheets. We are more than happy to discuss that and talk about it. Otherwise, have a great weekend. We'll be back with you Monday. See ya.